bit before 5 p.m. Central Time, the best time. You know what that means. It's time for First Call. My name is Victor Jones, but you're not here for me. You're here for the one, the only, the founder and creator, Mr. Thomas Sosnoff. Thomas, how are you, my friend? Happy Mother's Day, Thomas.
Happy Mother's Day to all the mothers out there. I think I'm pretty good. I mean, I didn't do anything today, so yeah.
No, you weren't out and about in the city of Chicago?
I did. I went to brunch. I did. I went to brunch.
You were at an all-day mimosa situation?
I definitely was not, but I was out to brunch, and it was quite lovely, and I don't even know what else to say except, I mean, it was all good.
Well, welcome back, my friend. It's going to be a big one. I'm excited for the Open, as I'm sure you are. I'm excited every Sunday, but I'm curious, Tom, what are they going to do with them on the Open? Big announcements or progress being made with the discussions between U.S. and China over the weekend to be announced on Monday, I suppose. What do they do with them on Open here in a few minutes?
I think this is going to be really interesting because I think this is going to be very much like this is going to be one of the greatest buy the rumor, sell the news scenario. What, you think so too?
I kind of do.
Yeah, I think this is a buy the rumor, sell the news. I have offers in. I mean, I didn't know how high to put them. I put offers in like up 90 and stuff like that, just to see where they open. I think this is the biggest joke I've ever seen. I mean, I really do. I think this is that any kind of at this point, any kind of announcement on trade is just a negotiated face saving. It's just negotiated face saving, and it's going to play right into the hands of a very emotional market, but not a sustainable market. So I think this is a clear as day, sell the rally.
We are gonna
again. I don't know what that means. Like, I mean, I mean, we went home a little bit long, but that was just because we got stuck long. I mean, I want to sell them. I mean, up 100 would be unbelievable.
That would be great. If they can just put these things back at 5,800, that would be terrific. Lean into them.
I mean, I thought up 50, but now I'm thinking maybe up 70 or 80. I put offers in up 100. I don't know. Take a shot.
Did they take enough vol out last week, man?
Not really.
The vol term structure isn't all the way normalized, though it is looking much more healthy than it was a week ago, or especially 2 weeks ago. Back at 22, the world's almost normal again. A couple more points, we're back into 18, Tom. You still selling vol at 18?
Oh, yeah. You sell vol until the cows come home. I mean, there's nothing else you can do. But I'm not so sure. I mean, we could see 18 obviously we could see 18. We could see 15 again by the end of the summer. Like I said, 2017, Trump's first full year, the first term, and we had zero vol. So we could easily get back to a period of really low vol. But, then I probably will back off. But right now, I think it's still rich enough. The only problem is earnings are kind of almost over, and that's been the best trade on the board. All the earnings trades have been the best trade of the last couple of weeks. The market itself has been pretty tough.
Just for the audience, from your perspective, when you say it's been the best trade, what you're saying is there haven't been many outlier moves this earnings season.
There's been basically one, Microsoft.
Yeah, Microsoft.
There's literally been one outlier earnings move at Microsoft, and there really hasn't been much else. So when you talk about kind of, earnings and the like, that's kind of, I mean, unfortunately, I hate to see earnings go away because they've been so damn good. Yeah, they might get a move up 100. There they go. They're up 75.
80 points. Yeah.
I was hoping up 100. So I have offers in at 84. They're trading 54. So we'll just wait and see.
Russell looks like the Russell is up the most on a percentage basis. I know you don't.
I don't think that would surprise you. That's the one that's been acting. That's the one that's been acting the strongest as of late. So I don't think that really surprises me that much. I think if you want to do something, and gold down $65, which is probably, that's a good thing.
That makes sense. I thought they'd take a little bit more out of bonds too, but Not happening. Only down 10 ticks right now.
At 114, I really like the bonds here. We were buying them on Friday. We were buying them on Thursday. We were buying them on Friday. I didn't sell very many on the little rally Friday afternoon. I think if you want to buy anything here, you're going to buy bonds, and I don't think you want to touch gold. I think the S&Ps. I think the S&Ps
gold could get absolutely smoked here.
Yeah, gold could be down 200. I mean, I think the S&Ps are a better sale than gold is a buy, and I think the bonds are a better buy than the S&Ps are a sale. I know that's going to sound crazy. So my favorite thing to up here, I haven't done anything yet tonight. My favorite thing is to buy bonds here because we're already kind of long a lot of them. And then my second favorite position is to sell S&Ps and sell gold. I haven't sold any S&Ps yet tonight. I want to see how this thing plays out. But up 80, yeah, that's kind of that makes sense. That's what I would have guessed. Up 50, up 40, up 50, I thought. But then when I was watching pre-market, they looked like they'd be a little stronger. But yeah.
Gold silver ratio looks like it's going to come in a little bit as well off of like that crazy 100 to 105 range. That could be another interesting trade this week.
Maybe it breaks 100. Well, I've had that trade on for a month now and it hasn't come in at all. so Godspeed to the people like me that have had that trade on because it definitely has not worked.
Well, this was the catalyst for that trade was always going to be these announcements, right? Because gold's rallying as a monetary asset, silver sluggish as sort of an industrial read-through, and this type of announcement starts to normalize it.
And there is no such thing as a market that is fundamentally sound based on announcements. I
agree.
It is not. There's no textbook out there that says, "Oh man, we got a strong market. We got an announcement." Every time I hear about announcements, I always think like, I always go back to kind of like when they found Saddam Hussein, hiding in the sewer or whatever it was, and the thought process was, oh man, now they're going to explode, and then they just kill the market. Like announcements scare me because it's always the opposite. Within 24 or 48 hours, like it's the opposite. Announcements are absolutely the worst kind of market. I mean, announcements like this, like a dumb trade announcement when you don't know that. When you don't know, the devil's always in the detail, and you don't know any of those details. You're just going on a stupid tweet. And when the devil's in the details, and if you're the current administration, what you're looking for is a way out of the tariff mess that you created. And the only way out to save face is to make deals. But you don't know the terms of these deals. So like the chances are that this whole thing is so the likelihood is that everything is very negative in the end. And so I wouldn't buy this rally here, Vic, with your money.
Yeah, I'm pretty hedged up flat here. I knew after 5,600 to 5,700 was sort of my range to make sure I locked in some stuff. I knew 58 was a possibility. Oh yeah. But I didn't think the risk and reward favored plan for that 100 points. I think it gets really dicey up here, but that's my personal opinion. We'll see what happens. The earnings calendars you mentioned, super light, but there are at least a handful coming up. Cisco, Walmart, Take-Two, Applied Materials, and John Deere towards the end of the week. Any of those interest you? Cisco and Walmart are going to be pretty interesting. Walmart may only for the read-through of the consumer, but their implied move is usually like 3%.
I mean, the last time somebody said Cisco moves in Cisco were interesting was 2002. So I wouldn't exactly say Cisco is going to have any impact on the market. I don't even, back when we were floor traders fighting to get order flow from the Cisco pit was like, the biggest thing on the floor. And then now it's like, it trades by appointment only, and it says it's not interesting. It hasn't been interesting. That's like has been interesting for 20 some odd years.
Fair enough. So Cisco's not on your radar. Walmart?
No, and what about Walmart? No, so Walmart's a different story. Walmart's trying to turn the corner, and they want to become, they have a new CEO. He seems to be good. They want to definitely embrace technology, and Walmart has made a huge move to to grab lots of kids in in the world of tech, and away from Google and away from Meta and away from like lots of other tech companies in an effort to build up their tech infrastructure. So that's the direction they're going. I mean, Walmart is smart enough to realize that they've got enough money that ultimately they can become whatever they want to become. But I think they're so far behind, that they've got a lot of catch up to do to get to be Amazon or get to be somebody else. But they're one of the companies that's definitely going to try and go that. I wouldn't be surprised in the next decade to see Walmart be a very different company and pivot towards technology like no other big. But they can afford to do it. I mean, this is a company that can afford to blow, $100 billion on tech and change the whole dynamics of the company. I mean, they can literally afford to do it. So I think Walmart's a little bit different for me than some of the other retail names, because I view Walmart as one of those companies that has the potential, not that it's going to be like, Apple or anything like that, but Walmart has the potential to be a very different company in the next 10 years. I don't, that's all. I don't think anybody else in the retail space has that kind of money or that kind of ambition.
Interesting. Speaking of technology, did you do anything with Google last week on that massive discount down to like 150, 149?
Yeah, I mean,
is that interesting to you at the level it is?
Sure. I mean, we sold a bunch of Google put ratio spreads. And so far it's been good because it's come back a couple of bucks. But I mean, I thought Google got oversold. It looked to me to be just, the one day when it was down $13 or $14, I thought it was kind of really oversold. It looks like they squeezed a bunch of people that had some short puts in there, and they squeezed a bunch of longs that were just like, you know what, I'm gonna rotate this into something that's far more interesting. So, we did fine in there last week. No pain at all.
All right. Well, we'll keep the show moving along here to keep it nice and tight on this Mother's Day Sunday. Pete Molmat, welcome to First Call, my friend.
Gentlemen, thank you so much. Great to see you both.
Hello, Pete.
Great to see you as well.
Yeah. How about it? It's getting nice in Chicago. Had a good Mother's Day for my beautiful wife, although she's not my mother. My kids came through, so that always makes everybody very happy. So
if your kids come through, it makes life a lot easier.
Yeah, it does, and they did.
So I have to ask you a question, just as like father. Do you have to remind your kids? Like Victor's kids are too young. Like, he doesn't have to remind them. Do you have to remind your kids? Older kids are,
I'm in the bubble of non-confirmation where someone could hear, but one of them. You know what? I'll tell you, if I was a baseball player, I'd be getting paid a fortune because I'd be batting around 660. So 2 out of 3 got it. One was a little struggled around. What date was that again? So I'm doing pretty well. Yeah.
There you go. So 2 out of 3.
What do you think about the developments over the weekend, the details or lack thereof, and then how do you position?
And again, Victor, you didn't want to believe in the man, and that's your fault. But it's pretty self-evident. It's all done. It's all good. I think, we were talking a little bit pre-show on this too. The amount of damage that's been done to the system. I mean, all this backing himself out of this box slowly. There's been nothing agreed to. There's been talks about moving this and moving that, and we'll have a forum for this. It's just, I think, unfortunately, we're going to be the volatility that we saw in March and April was violent. And, eventually an active trader got caught at some point a little bit. I think there's lots of opportunities now. I think but I think we are in the mode of good news is bad news, bad news is bad news. As much as a year ago it was completely the opposite, I think the question will be, are they able to hold on to this? What do we have, 80 handles now? Yeah, 80, 90 handles and 70 handles in SPOOs, 200, 300 in NASDAQ. I don't think we hold on to them for I don't think we hold on to anywhere near these rallies for 24 hours. I think maybe
I think it's like a Fed announcement. I think it's like a Fed announcement, Pete. I think with all the research, Vic, that we've done around Fed announcements, the euphoria lasts 24 to 48 hours at most, and then you have like a little bit of mean reversion. And we're not big on price mean reversion, but I think in this case, you're going to have 21 to 2 days if you get 1 to 2 days. That's it.
Right, and that's good. That will be it. And I think by the time you see, it's either when the UK comes in tonight and Europe comes in 1 in the morning, 2 in the morning, our time, it'll roll over. Maybe the rally holds through Asia. I don't even know if it's got that much in terms of legs to it. But interesting movements. Yeah, gold got hit really hard. I mean, we're still in the upper 10% of the range for the last 6 months. So yeah, it's down, but bouncing back a little bit as we speak right now.
Here's the flip side, Pete. Here's the flip side. I'm sort of interested to get your opinion on this. I asked Tom the same question. The people I talk to or follow or interact with, there's a general bearish sort of sentiment out there. I think more so than a bullish sentiment. I think if stuff went down to 5,000 and you swung at that fat pitch, then you probably had a good period of time, a good last 4 weeks. But I think there's a bunch of people that got very nervous or got whacked around 4 weeks ago, hard to pull the trigger, and are under positioned here. And there's still a bearish sentiment at 5,800. And I wonder, do you just think there's so many people that hate this rally that you've got an under positioned market still?
I think we saw a lot of that under positioning get satiated in the last week and a half. We're back through the 200-day moving average in NASDAQ. We're sitting right at it in SPOOs. We've definitely had a lot of it piled back in. I don't know what in a good way has changed structurally, Vic, because the same dysfunction of the randomness of this, the indecisiveness of this is really weird. I am not, and I'm sure Ilya will have a much more in-depth, well thought out thought on. We've got CPI coming out on Tuesday. Usually it's like, okay, all I care about is the movement, not the number. But it'll be interesting to see. This is the first price number we're going to get ingesting some of this. Are these price changes real? I think we all believe they are, and they're sticky, and no one knows where prices are going next, which is going to put a long-term constraint on growth. And I think that, will technology outperform right now? I think probably we'll see the usual suspects maybe be able to hold on a little bit more of what they've done recently. But I get your point about everybody was so kind of bloodied, they're not back in the game. I don't think those guys are coming back in the game at these levels with the idea that I've got another 3% until we're unchanged on the year, and I want that 3%. So no, I think if we're at these levels Wednesday, then I'm going to say I'm wrong, and the rally waited me out, and now everyone's stuck on that on one side. But I don't know. I think we're seeing by the move at Tuesday.
Listen. The bottom line here is this. I don't even know how, Victor. I don't even know how this is debatable. Rhetoric is not a fundamental reason. It's not a technical reason. It's not a fundamental reason. It's not even an emotional reason. Okay, it might be an engagement reason, and that's what you're seeing like now. But that's it. That's it. I mean, let's move on. It's just a trade. The nice thing is
rhetoric. You mean sentiment? Is that what you're saying?
No, I didn't say sentiment. I don't think sentiment plays. I don't think sentiment plays. Because I think that a market that moves based on tweets is with no detail and just tweets is just rhetoric. That's all. I don't think I don't think there's anything else to it. But I think that from a trader perspective, looking at this, I mean, you're getting up to some. I like when markets reach price extreme. And I'm not suggesting that 5,800 is necessarily a price extreme or 5,750, but you're getting closer to an upside price extreme than a downside price extreme. And anytime you get markets like in gold that got up, higher, or bonds that got low, or stocks that get high, anytime you get to what's like a relative or interpretable price extreme, that's when markets get interesting from a trader perspective. That's all I'm saying.
Right. And I think, Tom, you talked about this a couple of weeks ago, too. We were 3,500 in gold. We're now got down to 3260 this morning for a minute before we bounced a little bit. But there is something where damage has been done. So will we see up moves? Yeah, I think we're going to see up moves. Again, one step back up there that failed again. I think you've got a range now. Maybe you could get a rally up to that 3370 level. And I think this is where you get that two-sided action, and it's going to be much harder to roll over. I mean, interesting dichotomy in currencies as we open here. G7 currencies, euro down, sterling down, yen way down, Swiss way down, and at the same time, the commodity currencies, which really took the brunt of the beating, Aussie's up, Kiwi's up, Canada's up. So a little bit different split in the currency world. Reading into, okay, maybe it's not as bad. Maybe Canada will get the same treatment. A little less impactful on Australia through its close trading ties with China. But you're still seeing things like, copper at 470. If everything was solved, that'd be back to $3.50. So I think that for me, it's again, we're getting big enough moves on, and I like the term rhetoric, on nothing. Nothing is put in place.
Also, there's certain asset classes that you have to, they're a little different. Like, Bitcoin and gold, to me, those are passive plays. Gold, silver, Bitcoin. I mean, there's not a lot of two-sided trading there. Everybody's always on the same side of the market. But there aren't any shorts in Bitcoin. There are very few shorts in gold. Right. But when it's currencies, they're tradable. Both sides of that market trade. And when you talk about S&Ps, both sides of that market trade. So when you talk about the bond market, both sides of that market trade. So I think that there is, just basically know your product.
Yeah.
Just know the game you're playing.
Yeah.
We talked about this last week. Real quick. But you brought up Bitcoin. Are you in any way surprised about just the lack of excitement or headlines or just this Bitcoin's back up to near all-time highs, Tom, and it seems like it has nowhere near the fanfare that we had in quarter four?
Well, it doesn't seem like it, Vic. It's actually, if you looked at Coinbase's, they had earnings last week. And if you looked at their numbers, they said their trading was down by 20%, but that's their overall volume. Their retail volume was probably down by 40%. Right. Like if you look at what's happened at Robinhood and other firms, the reason I don't bring up Tasty in that case is because we're not, it's a tiny percent of our business. It's at Tasty, it's less than 1% of our business. It's a 0.5% crypto. So we're not a fair measure, but I would say our crypto trading is down, we're at all-time highs, and it's down by 30% at least. And I think, we're no different than other retail firms like Interactive Brokers. It's only us, Interactive Brokers, and Robinhood really that have crypto. And these firms, including Coinbase and other, Crypto.com and Kraken and all those firms, the trading volume among retail customers is way, way, way down. And crypto's at an all-time high. So there's a couple of explanations for that. One is that marketplace just got tired. Two is that the vol in there died. And when the vol dies, that means your upside dies. And there were way more interesting plays in the stock market. And I think that just some of the blooms off the rose. And so crypto is just another asset class to me right now. And it's very similar, like I just mentioned to Pete, very similar to gold and silver. It's just, it's another asset class with a similar volatility, and that's it. But you can't even trade both sides of it, so it's not that interesting.
One-sided bias, yeah. It'll be interesting to see what bonds do with this too. Because
I agree with you, Pete. I agree.
Yeah, and I think the bonds are probably, if you want to be long, the twos, they have been continually unwinding. So I don't have on that 2s versus 10 spreads, don't have any of that on, but the twos have just been taking a beating. So I think if you want to be long interest rates, probably the long end of the curve is where you want to be, and 114 seems like a good spot. So it'll be interesting to see how that unfolds this week. It'll be interesting to see also if bonds do trade lower and challenge those 112 lows, do equities hold on to that rally or do they roll over on that? So there's still a lot of stuff at really, we're getting good price action in a lot of places. I think we just have to as you pointed out, where is the best action right now? I still think it lives on the equity side.
Pete, we got to let you go. We got to bring in Ilya and keep it moving. Thanks,
All
man.
right, have a great night, guys. Thanks.
Hey, Vic, S&P still
Pete.
up. S&P's still up 72. NASDAQ's up 300. Literally nothing's moved since the opening. Dow's up 400. Russell's up 33. Bonds are still down 10. Gold's still down 67. Now it's down 62 before. But I have not seen anything. Just looking to see, and Bitcoin's up 850. I haven't seen anything else move. So this is kind of where we opened across the board. Hey, Ilya.
Yeah. ETH kind of underperforming.
Well, ETH's been out of control. ETH had an unbelievable move last week. So it's just, that's all.
Yeah. Ilya, how are you, my friend?
Good. It's a beautiful day here in San Francisco. My boy is learning how to dribble a basketball. It's good things.
Oh, very nice.
We knocked out Mother's Day yesterday.
I kind of have a feeling like you don't have him dribbling like a regular basketball. He's like, you gave him a medicine. You gave him one of the medicine balls that you use to work out with. And you said, dribble this, son. If you
Not only is it a regular basketball, but it's a little bit smaller so that maybe when he finally gets it to the basket, it actually goes in. But he's only 4, so he can't even quite get it up there. Now we're just learning to bounce it up and down.
My friend, what say you about the developments over the weekend and risk going into the week?
I mean, I'm not going to say anything different than what folks have heard here so far. I mean, to me, this whole thing was always a growth thing. It was a growth thing at the beginning and middle of February. Once the data started to show you, things rolled over. April was obviously a little bit of a hair on fire kind of a situation where people thought, oh my God, this is a sovereign or a currency crisis in the U.S. That was obviously not the case because the U.S. is too big and too embedded in the global financial system to have one of those in this environment because it's still the only game in town at the end of the day. And so that unclenched. The White House showed it's responsive to some degree of market discipline. Once the bonds went up to, let's say, 4.5 on the 10-year, that helped. And so now we're back to the growth thing. And I don't think this non-announcement of a non-deal over the weekend changes any of that. The damage is done. We're going to have a recession. The question is the recession going to be short and shallow, or is it going to be something ugly? And because recessions are non-linear, is it going to have some sort of second round effects where you hit the GDP part of a debt to GDP ratio in the U.S. and you go, is the debt still sustainable? Can everybody still float out there? And maybe there'll be second round effects. We don't know.
Which way would you be leaning on risk going into the week? Because that can all be true, but the economic piece is sort of a slow moving train. So what
totally
risk can do anything on a week to week or day to day basis. So how do you position in risk?
So first of all, I agree completely. You can have your opinion of what the economy is doing, and that can tell you absolutely nothing of what markets are doing. You have to go with the price action first and foremost. There's no question. I agree. I think the risk reward very clearly on whether it's NASDAQ or whether it's S&P, the risk reward favors being short. I'm short. I've been short. You kind of lose it in the price action. But last week, both indexes were actually down a little bit. So they actually stopped rising last week.
Yeah.
It wasn't the kind of exuberant, oh, my God, we hit the highest levels since early March. We're almost at 2-month highs and we're powering higher. No, we're not. We couldn't even sustain a positive close last week despite hitting the highest in almost 2 months. That to me smells of exhaustion. I think we kind of have erased April's holy moly moment. We've closed the Liberation Day gaps on everything back to the same starting line. And I think now we're looking for, okay, let's just get back to regular recession time. This means bonds go higher, the dollar goes lower, stocks go lower, and we just have a regular economic downturn type of a dynamic out here.
And there's no, that's your base case. There's no possibility.
That's my base case. Of course.
There's no possibility that recession is out of the cards in your mind.
There's always a possibility. I just think it's incredibly unlikely at this point.
Fair enough. What do you think? How are you positioned in the dollar? Question to both of you. Pete brought it up real quick, but I didn't get to ask Tom about his positioning. I'm short. The only thing I have on is I'm short 6E. I'm short the euro here. Ilya, how are you positioned in the dollar? Same question to you, Tom, after that.
I'm long the Aussie and I am long the yen. They took a period to digest there and didn't really come off. I thought one of the more interesting things in April was stocks corrected, bonds corrected. The dollar did not really rebound. And I thought the Aussie looked especially strong. I thought the yen looked like good risk reward. And so I'm long both of those. I want to be long the euro again because I think that's a good story. And I like sort of the idea of Europe going higher, especially if they spend all this money on defense next year and create inflation and economic activity. So higher, so more on rate side in Europe, more on equity side in Europe. I think that's all a very compelling idea. It's not quite there yet for me. I need the euro to show a little bit more life, and then I'm long again. Now, obviously, I was long in February, head over heels. I'm just out now, and I want to get back in at some point here soon.
Tom, what are you doing with the dollar?
I actually just rolled all my positions from May to June, so I'm coming in tomorrow. I'll be short the dollar across the board because it's up big. I'm short premium, so I'm long British pound, long Canadian dollar, long euro, just on the basis of being short strangles. The only one I'm just pure naked long, like no short calls and just short puts, is the yen. So, and I plan to stay long the yen from now until from now until your kids go to college. Okay, to give you an idea. So I will be long the yen no matter what. If the yen was to crash, I'll still be long the yen. So I have figured out my yen strategy. You just sell out of the money puts in there and you never look at them. And that is my strategy. It didn't work for about a year or 2 years straight. And for the last 2 years, it's worked every single month for almost every single month for 2 straight years. So I am staying short puts in the yen. That's just a strategy. Short out of the money puts. I just rolled them on Friday or last week. Maybe it's Thursday. And then the other ones, I'm all short strangles. And after tonight's move with the dollar being higher, I'm going to be a little bit long deltas in all of them, but it's not intentional. I'll neutralize that in the morning. I'm just not. The problem with trading currency options is that they're very liquid until the next morning.
That I think they call it the Schrodinger's cat strategy. Sell puts and never look at them.
That's right. If you stay small enough, it's no different than any passive long anywhere else, right? You know, it's an option trader's way of holding a passive position.
You're a passive investor in the Japanese.
The Schrodinger's, yeah.
Well, I'm tired of people saying, they go, what do you invest in? I go, I'm long Apple at $34. Okay. Well, I'm long Japanese yen at 64. What do you want to do? And then they look at you like, I'm not good at for coffee table talk, like water cooler talk. I go to a party and they're like, what are you buying, Tom? I'm buying Japanese yen. Oh, yeah, great.
Oh, I'm the worst. I'm right there with you. But
I believe you're the worst.
My wife just walks away from me when somebody comes up at a party and they're like, "What do you think about what's going on with the trade negotiations?" The moment I inhale air, my wife just turns on and goes, "Oh Christ," and just walks away.
See, the good thing is they're taking out the dyes in food, because that was one of my go-tos at a cocktail party. This has red 40 in it, right? And then I'm off. I'm down the rabbit hole for 35 minutes.
That's it.
All right.
You used to be somebody. That's what you've become now. You used to be somebody. It's really sad.
Oh, it's bad, man. It's so bad. All these statistics about the problems with the world that we need to solve. People are like, get him out of here. Ilya Spivak, final word from you, and then Tom, we'll go back to you for the final word for traders going into this week. Go ahead, Ilya.
I think you go into this thing with clear eyes and you don't get caught up in the headlines and you trade the price action, because as we just said moments ago, it doesn't matter what you think. It doesn't matter what I think. It doesn't matter ultimately what actually proves out to be right. As the great Ira Harris said, and as I quote constantly. If you're
The
right
great
at the
Ira
wrong
Harris,
time,
I have never
Don't.
heard
That's
that in my
right.
entire life.
Tom,
That's right.
don't. He's a good
if you're
friend
right at the
and a good friend of the
if you're
show.
right at the wrong
Oh,
time, you're wrong.
no. I like Ira. I've known him for, I don't know, 30 years. He's one of my really good friends, first cousins. So we have a relationship. I got it. But I never heard anybody
One of the
put him that way.
one of the first things I learned about really trading macro was from a book called Inside the House of Money, which was kind of a knockoff of the Market Wizards series. And the interview in there that made the biggest impact on me by far was Ira's, because he had these great quotes that you could take with you and like put on a Post-it note on your screen so you're not being an idiot in markets. And the one I really have tattooed on my head is, especially as a macro watcher, if you're right at the wrong time, you're wrong. And so this is that here, I think.
Final word to you, Tom, and it doesn't surprise me at all that you have a tattoo of an Ira Harris quote on your body. Tom, final word to you, man.
I definitely do not. It's rare that we get. It's rare that we get well, I shouldn't say. Hey, let me rephrase that. It's rare that we get decent volatility and price extreme to the upside. Usually when you get price extreme to the upside in the S&Ps or NASDAQ or Russell or whatever it is, volatility is crashing. And so when that happens, it becomes a very difficult, directional play because it's hard to be right vol-wise, so you have to be right directionally. This is one of those rare opportunities where I think you're at a upside price extreme or getting close to an upside price extreme. We've basically been hyperbolic since early April and to the upside. So you've got price extreme, but you still have elevated volatility in the 20 handle. I think that creates a lot of opportunities for traders. Rich prices and high volatility, that's rare. Most of the time when you get really high volatility, you're crashing. And when you're crashing, it's really hard to pull the trigger to do anything because everybody's scared. And when you're rallying and you get high volatility, it's really rare, and that presents just an interesting opportunity. And I think if you couple that with what I think is a very interesting opportunity in the bond market right now at 114, and some of the various commodities and a bunch of different stocks, because there's a lot of stocks to me that they had pretty good earnings, so they got rich all of a sudden relative to where they were. A lot of these stocks have rallied, 25, 35, in some cases even 40%. So I think there is, for the first time in a long time, the combination of high volatility, high price, potential for mean reversion, and I do like to buy the rumor, sell the news type thing, and I think this is a sell the news. That's all.
Agree.
Well said. Great way to take us out. For everybody that's watching, thanks for spending some time with us. Hit the like button on your way out the door. No matter where you are in the world, we've got content for everybody starting at 1:30 a.m. Central Time. So if you can't sleep, join us, or if you're somewhere else on a different time zone, join us as well. We'll see you back here tomorrow, only on Tasty Live, everybody. Peace.
Welcome. It's Friday the 9th of May, and don't adjust your sets. Yes,